This is AJ, welcome back to the Handyman process. In today's video, I'm going to be talking about the two different ways that you can expense your vehicle or track your vehicle expenses. You can either take a standard mileage deduction or you can track every expense associated with the vehicle. A lot of times people get these confused, they try to do both, and it's a one or the other type of situation. So I'll go into a little bit more detail about this in the video. Stay tuned. So like a lot of you, when I first started out doing this business, I didn't know a whole lot about the business side of things. And I had questions like, I wanted to buy a truck. Does the business buy a truck? Do I buy the truck? Do I keep all my receipts for gas? Like, I didn't know any of that stuff. So I started doing a lot of research and a lot of reading. I read a lot of books. Some of the books that I recommend are Small Time Operator by Bernard Kameroff, which is a great explanation of some of the topics I'm going to go over here, as well as 475 Tax Deductions, which is also written by the same author. Great books to kind of get you, I would say, at least started on understanding some of these things related to business. And there's a ton of other books out there. If you have a good comment for a book in terms of running the business, go ahead and drop it down below. But when it comes to vehicle expenses, like I mentioned in the intro, there's two different ways you can do it. You can take a standard mileage deduction, essentially track all your miles, which is a requirement by the IRS, and then multiply those miles by a dollar figure. I think currently it's about 65 cents. And then you can lower your taxable income by whatever that math works out to be. That's the simpler way to do it, easier paperwork, but maybe not the best in terms of lowering your overall taxable income. So again, that's an easy method. If you're just brand new and starting, I don't want to give you advice. It's just what I did. I went down that route because as a part-time guy, I use my vehicles for a whole bunch of things. I use it part-time for Handyman and other things. And then if I do the actual cost thing, there's just a lot more paperwork I want to do. I probably could have saved a few bucks, but for me, it wasn't worth the headache. So that's one method, the standard mileage thing. And what I use, and I'll put a link up here somewhere, is I use MileIQ to track all my mileage, and it's been fantastic for me. I started off with QuickBooks Mileage Tracker, and I think I was doing some manual stuff with Mark8, but Mark8's mileage stuff isn't the greatest. MileIQ is by far the best tool that I've used, and I just log into it, and you'll see in the video that I put up there, I log into it, I swipe what my drives are, and it's done. And then at the end of the year, I just add that to my Schedule C, and have that as a mileage deduction, and I'm good to go. So the other method is the actual expense method. And this is when you see a lot of questions, people asking, can I deduct this? Can I deduct that? When it's related to vehicle expenses, they're usually talking about the actual expense method. So in this method, you can depreciate the asset, whatever vehicle you bought. Again, I should have mentioned this earlier. I'm not an accountant. I'm not giving you accounting advice. I'm just giving you advice from somebody who's walked through and studied some of this stuff. So you get some depreciation benefits. So if you're running a lot of trucks, you probably want to go the actual expense method. If you're not, then again, you have to make a choice. But if you do use the actual expense method, then you can expense the cost of the vehicle and follow the depreciation rules associated with that, or the rules associated with leasing. You can deduct gasoline, diesel, maintenance charges, anything related to keeping that car going and running, you can deduct as part of that. Again, you have to keep pretty good receipts with all that stuff. I recommend, the IRS recommends that if you are doing any of this stuff, you should have a dedicated account, your business account, where you're paying for all this stuff. Some people can't do that for one reason or another. Just make sure you have really good records, because you'll need the records if you ever get audited. So most people don't need the records, and then all of a sudden they get a call from the IRS and they're freaking out. So just have a good method for doing that stuff. If you've seen my video on Novo, I track all my stuff in Novo. So any expenses I have related to that just kind of go right in there. But again, since I use the mileage deduction, I don't worry about the actual expense method. Anyway, hopefully this is helpful. If you're new and didn't know any of this stuff, this is kind of a starting point for you. I would dive a little further in. There's a lot of accounting channels out there that will dive into this. I listen to a podcast called Keep What You Earn by Shannon Weinstein. It's probably one of my favorite podcasts. She breaks things down in normal language. She doesn't speak like an accountant, and does a real good job. So I'd recommend you check out her podcast or her website for a little bit more information. But there's a ton of people out there that go over this stuff in a little bit more detail. All I wanted to do is introduce you to the two different types of methods of doing it, and then give you some place to start from. Anyway, hope you liked the video. If you have any questions or comments, go ahead and drop them below. If you like this kind of content, please go ahead and give me a thumbs up, share, subscribe, let your friends know, and stay tuned for the next video.